in today's video I'll be presenting some articles I found online. The first one is from the website USA Today Money. So let's listen to what experts have to say. But in short, you must know that the CPI came out as 6.4% instead of the forecast of 6.2%, and the monthly inflation rose by 0.5%. So let's listen to their short video.
Is on the rise, it's not always as bad as...
Okay, let's listen now.
When inflation is on the rise, it's not always as bad as it sounds. Here's how it works and what you can do to protect your money. Inflation is the rate at which the price of goods and services increases over time. As prices go up, the purchasing power of your money goes down. This is something that's been going on for decades, and a lot of things can affect the rate of inflation. But one way the government controls it is by adjusting interest rates. Interest rate is the amount you get charged when you borrow money. Usually, inflation and interest rates have an inverse relationship. For example, during the pandemic, the government kept interest rates low to make it easier to borrow money, which stimulated the economy, but that led to higher inflation.
Many economists have actually argued that the leap in prices that we've seen recently is a byproduct of the economy reopening, and it should abate by next year. Still, even before the pandemic had happened, inflation over the past decade has remained largely muted. And that's really due to the fact that things like tech innovation, globalization, and increased productivity are all still firmly in play, and experts say that that should help keep inflation in check this year and for the foreseeable future.
Inflation affects the prices of everything from your food to your house to the amount you have to pay in taxes.
For March to April, we saw an increase in car prices, airline fares, hotel rates, car rental prices, admissions to sporting events. All of those rose on a monthly basis.
Higher inflation also impacts the stock market, but there are things you can do to protect yourself.
Experts suggest that you end up sticking with stocks. So things like materials and energy, those tend to benefit from higher commodity prices. Real estate investment trusts have also offered attractive returns in prior periods of rising inflation.
Wait, so that is it, but
when you're traveling, you may...
The real estate part was way too complicated for a beginner. Like, you need a lot of money to buy apartments, and you need some money in the beginning. Okay, so here they explain it. They go into much more depth about it. If you want to read about it, I will link the articles as always in the description. So let's see the second website. So it's from US Bureau of Labor Statistics. They also present here all the upcoming data. This is their official website from the government because of the .gov extension. Okay, so they also said here the latest numbers are plus 0.5% CPI, Consumer Price Index, for January 2023. So also you need to take in consideration the upcoming data for February 2023, which is scheduled to be released on March 14 at the same time, 8:30 a.m. Eastern Time. Also here they say the same thing. So Bitcoin sank in the first hour, and will be here. Bitcoin sank in the first hour, and I will be showing you that on the TradingView website right in a second. So they also say here the same thing, and also go a little bit more into depth here. So I will link all the articles I will be presenting in this video in the description. So if you're interested, you can also read more about them. So let's see on the TradingView what actually happened. So at 8:30 a.m. Eastern Time. So let's see. Let's zoom it a little bit. Okay, here. So we are on the 15-minute time frame, and let's see. So it went, but this is not a little bit. Let's go on the 1 minute time frame. Let's zoom it now and see. Let's go back. So here. Okay. So let's see here. We are at 8:28. So it rose a little bit to 21,900, and it dropped to 21,000. Let's see, 21,532. So how you could have played this? So let's say you saw that the prices went up in the last month, and you could have went short from here. And when the CPI data was announced in 2 minutes, you would have played it with, let's say you would, so this is a quick drop of about 1.6%. So you could have went short with leverage. Let's say you would have had like X10 or X20 leverage short position on it, and you could have made easily like between 10 and 30% gains. And then you would have closed it instantly. So the CPI data announcement is really pretty fast, so you gotta move really fast. So if you're not advanced, I suggest you just buy, hold it better, or just trade it after the market reacts from the data. And after that, let's see what happened. We saw a pump from here of around 3%. So just like in the article said from before. So a small percent pump of around 3.2%. So this would have been a risky long, the same with 10x leverage or 20x leverage, something like that. And you could have made like now we could have made like 30% or 60% of your whole position. So yeah. So now it's pretty much trading sideways, and I mean we have to wait like a little bit more to see how the market will interpret the data. So yeah, I mean I would have jumped in a position here, not now. And you can also see it by yourself. So you can go on the time frames of 15 minutes, 1 hour. You can also take the, let's see, Fibonacci retracement. You have those three extensions. So auto fib extension, auto fib retracement, they are pretty much the same. So oops, I already have like 3 indicators. So let's see what they would have suggested us. So okay, so right now they are suggesting us a quick drop. So here you saw like at 22,300 a little bit of rejection, and now it's like dropping a little bit. Okay, so let's clear this. What you have to take in consideration always when those kind of data come out. So the DXY index, this one, and also so let's explain this. So when the DXY pumps, Bitcoin drops. Like the money is flowing into the dollar index, and it's flowing out from the Bitcoin. So it's pumping it on this one, and it's simple logic. So when this rise, Bitcoin drops. When this DXY index goes down, Bitcoin pumps. That's what you have to keep in mind. So this is one of the 2 things. Also the US stocks. So you need to keep an eye on SPX 500 index here, depending on your time frame. I mean, depending on your time frame, you need to see when it opens and when it closes, depending on where you are from. Okay, so this is one of them. So this works the same. If this pumps, Bitcoin follows, and it will also pump. If this drops, Bitcoin will also follow and drop. Okay, so that's pretty much it. I hope you like this video, and stay tuned for the upcoming ones. And if you want me to review more things, projects, I don't know, let me know in the comments and I will check them out.